You're in a trade. It's not working out how you initially planned. But instead of exiting, you think, maybe if I just wait, it will turn around. Then you start running numbers in your head. If it just moves back to my entry, I'll break even. If it hits this target, I'll make X amount of dollars. The thing is, in this moment in time, you're not trading the market anymore. Instead, you're trading a story of what could happen, a story of hope. This story is what 95% of traders trade daily in the markets. And this is why 95% of traders keep losing money day in and day out in the market. You might have wondered why so many traders, even when they haven't made a single dollar in profit, sometimes for years, keep coming back for more. These traders blow account after account. They swear off trading forever. They promise themselves it was the last time. And then next week, they're back. Chart open, trade placed, but same results. It doesn't make sense on the surface, but once you understand how your brain works, it makes perfect sense. And if you find yourself in this compulsive 95% camp, this video is just what you need to break free. I'll be showing you how to detach from your losing trading patterns and join the elite 5% successful traders. Let's get into it. Intermittent reinforcement, the three-monkey experiment. Let me tell you about an experiment with 3 monkeys and one simple task. Each monkey had to complete the same activity, but how they were rewarded for completing the task was interesting. Monkey 1 did the task and got rewarded every single time. It was simple and predictable. The monkey quickly learned the system. Action equals reward. So, he kept going. Motivated by the certainty of success, he kept going until he got tired and decided to stop. Monkey 1 had control, and he could predict the outcome of his actions. Monkey 2 did the same tasks but got nothing. No matter how many times he tried, no reward came. And eventually, he stopped trying completely. Even when encouraged or forced, he refused. Why? Because he had learned the hard way that effort didn't lead to results. There was no hope, no payoff. So, what's the point? And there is the third monkey that was given something much more dangerous: random rewards. Sometimes he got rewarded on the first try, then not until the third. Sometimes he was given back-to-back rewards, then nothing for 5 straight attempts. The reward system had no pattern, and yet he kept going. Why? Because he had hope. He didn't know when the reward would come, but he believed it could come on the next try. He was chasing uncertainty and possibilities, and he was hooked. Monkey 3's predicament is the trader's trap. It's the one profitable trade from 3 months ago that still lights up in your memory. The time you randomly caught a huge candle after breaking your rules and made money. It's the day your gut told you to hold the trade just a little bit longer, and you were right. Even if you've lost more than you've won, your brain doesn't care, because that one win felt amazing. That is intermittent reinforcement, a core concept in behavioral psychology and gambling addiction. It's when random rewards create the strongest and most lasting habits. So it's not a lack of discipline that's keeping you stuck in losing markets, and it's not a strong belief in your edge. It's your brain being wired to chase dopamine through uncertain rewards, just like Monkey 3. And unless you recognize it, unless you see it, you will keep telling yourself, "I'm so close to figuring it out. This strategy just needs more time. Next week, I'll finally catch the move." When really, you're just trapped. Trading not because it's working, but because you can't stop. The Art of Letting Go. The Surrender Experiment is a memoir by Michael A. Singer, author of The Untethered Soul. The book documents his 40-year journey from a reclusive hippie to a spiritual teacher and successful tech entrepreneur. The core philosophy is radical surrender, letting go of personal preferences and trusting life's unfolding, even when it contradicts one's desires. Singer argues that the universe operates with an intelligence beyond human comprehension, and that by resisting life's events, we create suffering. Meanwhile, by surrendering, we align with a greater flow that often leads to unexpected success and inner peace. In 1970, Singer was a directionless graduate student in Florida, living in a Volkswagen van. A pivotal moment came during an awkward conversation with his brother-in-law, when he became acutely aware of his anxious inner monologue. This sparked his fascination with observing the monkey mind, the constant mental chatter that distorts reality. His breakthrough came when he realized that true freedom lay not in controlling life, but in releasing resistance to it. In the 2000s, Singer faced a federal investigation. Though innocent, he was indicted alongside other executives. But instead of resisting, he surrendered to the ordeal, using it to deepen his practice. And after years of legal battles, all charges were dropped. This ordeal reinforced his belief that challenges are catalysts for growth. As he writes, "Life puts us through the changes we need. The question is, are we willing to use this force for transformation?" You're possibly wondering how Singer's story relates to trading. To stay sharp and focused as a trader, it's important to learn how to keep your emotions in check and step back from the trades themselves. The market is a vibrant, fast-moving world brimming with opportunities, and that excitement can easily send your emotions soaring with the prospect of profit. But those feelings can cloud your judgment, pulling you into impulsive, emotion-driven trades. Letting go in trading is the ability to separate emotions like fear, greed, and regret from your trading decision-making. But don't get it wrong. This is not about suppressing your feelings. It's about observing them without letting them dictate your actions. Studies have shown that traders who master detachment outperform those driven by impulse, as emotional reactions often lead to overtrading, revenge trading, or abandoning proven strategies. The brain's amygdala triggers fight or flight responses during market volatility, thus clouding your judgment. Detachment engages the prefrontal cortex, the rational decision-making center. How to properly let go as a trader. There's a quiet strength in knowing when to step back, not as a sign of weakness, but as a sign of mastery. In trading, the ability to let go is often misunderstood. It's not just about exiting a losing trade or walking away from the screen. Rather, it is about releasing the one thing most traders cling to the hardest, the illusion of control. And that illusion, it's addictive. It tells us we're just one tweak, one perfect entry, one big win away from mastering the market. Just like Monkey 3. But the truth is, control doesn't exist in the markets. At least, not in the way many of us think. The best traders aren't those who try to bend the market to their will, but those who've trained themselves to flow with it, to respond, not react, to observe, not obsess. If you've ever felt trapped by the need to be right, the urge to fix a bad trade, or the compulsion to chase what you lost, then these 5 practices are your way out. They're the trader's path to surrender, not as a loss, but as liberation. 1. Trade probabilities, not possibilities. The rookie's mind says, "What if it works?" The seasoned trader says, "What are the odds?" Letting go starts with shifting your focus from outcome to process. You're not in the market to win every time. You're here to execute an edge over time. And that edge lives in probabilities, not possibilities. Every trade has an outcome, but your job is to focus on execution. Follow your rules, manage your risks. Keep a journal where you score yourself based on how you traded, not how much you made. Because when you grade your behavior, not your balance, you stop chasing wins and start building consistency. 2. Pre-commit to risk acceptance. Letting go means making peace with loss before it happens. So before you enter a trade, write this down. I'm willing to lose X amount of dollars on this trade. Say it aloud and mean it. This small ritual does something powerful. It severs the emotional thread between you and that trade. And if the market moves against you, you're not frozen in hope mode, begging for a bounce. You're calm, decisive, and detached. When you truly accept the risk, you release the fear, and the fear is what fuels the need to control. 3. Eliminate should from your vocabulary. This pair should go up. This breakout should hold. The market should bounce here. Let it go. Should is your ego whispering in technical language. It's your bias wrapped in analysis, and it's dangerous. Instead, retrain your thinking. Use language that leaves space for uncertainty. Languages like, if price holds here, I'll stay in. If not, I'll exit. You're not here to predict the market. You're here to respond to it. Letting go of should removes the emotional resistance to what is. 4. Practice zero expectations. Opening a trade without expecting anything takes courage. No dream of profit, no fear of loss, and no story in your head. Do this multiple times with small risk, while paying attention to your breathing, your posture, and your thinking. Without the weight of expectation, you trade lighter, smarter, and cleaner. This doesn't mean you don't care. It means you care about the right thing. Your discipline, your routine, your strategy, not the outcome. The market doesn't owe you anything. It doesn't punish or reward. It simply is, like the wind and the sea. You don't control it. You learn to sail within it. Letting go of control isn't a weakness. It's what frees you from fear and greed. It's what gives you clarity when others panic. It's what builds real confidence. The kind that doesn't shout, but listens, that doesn't chase, but waits, that doesn't need the win, but respects the process. In the end, letting go is the edge, your real and only true edge in the market. If you are still battling emotional trading, slipping discipline, or feeling the urge to get back at the market, you're not alone, and you're far from broken. But if you're ready to build mental clarity, stay calm under pressure, and prevent your emotions from hijacking your setups, I've got you. Join our Telegram channel for daily mindset tips and occasionally real-time signals. The link's in the description. And don't miss this recommended video. It's your playbook for mastering the mental game, staying focused, composed, and consistent no matter what the markets throw your way. Click to watch and upgrade your trading psychology for real. If this video helped you, drop a like, share it with someone who needs it, and comment below. I read and reply to every message. Until next time, trade smart, stay sharp, and may the trend be with you.